With Tom Albanese, who is CEO Vedanta. Listen in to a slice of that conversation on where he thinks the metal prices are headed from here on.
So I think what we have seen is a good improvement in prices. Our overall basket of commodities of Vedanta has increased by about 100% year on year. So that's been a very good, that's our top line revenue. So in terms of a top line revenue price going up 100%, that's certainly beneficial for the company and basically the investors of the company. I think though, recognize that even though they've risen 100%, they're still about the mid-range of where they've been over the past 5 years. Yes. So again, you are not in those toppy levels you would have seen when China was growing quite rapidly. So I'd say that we're in a more benign pricing environment now, sort of a Goldilocks effect, not too hot, not too cold. And I think over the next couple of years, if they stay in this range, basically, they're not going to see a lot of significant new capital investment globally in the mining sector or in the oil and gas sector. So you'll see basically it'll be just a little bit tight, the markets, and the commodities will be just a little bit firmer.
You know, just coming to commodity specific now, and we've seen the zinc prices gain 60% in last 1 year. It has been that kind of a run-up in nickel, copper, lead, etc. as well. Where do you see a more potential for a price rise going forward?
Yeah. So I think what you're looking at in some of the commodities have been rising more than others, and generally it's not been because of demand, because demand has been relatively
static. And add to that
static.
iron ore and steel as well.
Steel, of course, yes. It's been actually supply, and the fact that for those commodities where the global sector has spent the least amount of money investing, those prices are going up the most. So over the past 10 years, the least amount of money has been invested in zinc, so that's why that's risen the highest. And in copper, you know, there's been a few new copper mines going in, but a lot of the big copper mines in the world, some of the big giant copper mines in South America, they're basically getting near, you know, their peak production. In some cases, they're close to exhaustion. So what we would expect is that in copper, you're going to have the double whammy of higher levels of demand because everyone wants electric cars, hybrids, there's more electrification, including here in India, of course. So you have a huge increase in copper demand as people want more things that are electrified for clean air and everything else. And you have some of the big mines are beginning to phase down. So I do see that, you know, and on a longer term basis, copper has very good prospects. In the immediate basis, zinc's the strong one.
All right. So, you know, when you talk about the kind of price rise that we're expecting, it's not just about India and China, because the US is talking about spending, and the Europe, even with the Brexit and the election concerns, the demand there has been strong as well. So where do you see the major demand pockets globally?
So I think what we're hearing from global economists right now, for really the first time since 2007, is this concept of a synchronized uplift in the economy, where you actually have all of the big economies are actually moving forward. There's no one in sort of a deep recession or going backwards. The U.S. engine of growth is actually a little bit stronger now than it had been before. You see, of course, the Chinese economy is slowing down, but it's not going into that recession that people feared about, even a year ago. And Japan and Europe, they're very slow growth, but they are basically not going into negative territory. They're staying in positive territory. And of course, the developing economies, the emerging economies, they're all in the 7 to 10% growth range. So that's all leading to, I think, a global growth.
Well, that really is the key word coming in.